Hey everyone, ServiceNow reported second quarter earnings results. So in this video, I'm going to review those figures. I'm also going to update my recommendation of ServiceNow stock coming into these results. I had the stock on the borderline between a hold and a buy. You're going to want to stay tuned to see if I'm updating that recommendation or changing it. So total revenue came in at 2.15 billion, an increase of 23% year over year. Earnings per share was a massive improvement at $5.12 from 10 cents last year. There was a few one-time items in here like a tax benefit that skewed the results higher. I would say cash flow from operations is a better metric to look at in this quarter for ServiceNow. RPO, which is remaining performance obligations of 7.2 billion, was up by 25%. That was impressive. Remember, RPO is remaining performance obligations. These are contracts the company has already signed and will turn into revenue as their clients use their services. So this was good news. Also important to see RPO rising faster than revenue. That signals that revenue is likely to accelerate in the next few quarters. Cash flow from operations, I mentioned earlier, improved to 1.48 billion. That was up from 1.3 billion in the same quarter last year. I like to see companies that are growing revenue at more than 20% and also growing profitability and growing cash flow. That just makes the revenue growth look even more impressive because it shows me that the company's not selling their products and services at lower prices just to encourage revenue growth. They're selling their products and services at prices that are going to drive cash flow and profitability. The company ended the second quarter with 45 customers of over 20 million in ACV. That stands for annual contract value. That was an increase of 55% year over year. And in my opinion, businesses like ServiceNow that help with customer workflow to automate tasks are really, in my opinion, valuable to larger organizations, right? Because these are the organizations that can truly benefit from these services and can benefit from the time, effort, and upfront cost of spending the money for ServiceNow's services because they're going to utilize it, right? If you're a company that's hiring 1,000 people every quarter, you can use these benefits to automate that workflow, to automate a lot of those tasks in that process. But if you're a company that hires maybe 3 people every quarter, you're not going to really benefit from these kinds of services, right? It's not even worth the time to set these things up, to communicate, to contact and try and learn how to implement these services because you're only doing a couple of people every quarter. So once you expand and scale, then the return on investment, it's not just the return on investment in money, it's the return on investment in time to convert into these systems really starts to pay off. So it's encouraging to see ServiceNow gaining traction with these larger corporations, those that are spending over 20 million in annual contract value. So now to update my recommendation of ServiceNow stock, I had it on the borderline between a hold and a buy, and I'm upgrading it after these results. I'm upgrading it to a buy. So it's no longer on the borderline. I'm now saying that ServiceNow stock is a buy, given its impressive revenue, profit, and cash flow growth it is experiencing, and given its prospects going forward in the rising effectiveness and enterprises looking to automate and implement AI into their workflows. So for all those reasons, I'm upgrading ServiceNow stock to a buy. All right, but that's all I've got for this video. Thank you so much for watching. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.